Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution each and every week. Of course, talking about the way the world is changing as we look at it through the lens of politics, finance, and technology. I'm in the studio today with Max Gagliardi, and we are going to talk about how this world is changing. Some hot topics today, specifically around the death of the dollar that's been exaggerated, as well as the changing shift backing the dollar in energy markets, and so much other stuff I want to talk to you about, Max. Anyway, thanks for taking the time to join me today.
Yeah, Mark, thanks for having me on. Excited to be here.
Man, I want to get into some of these pressing issues that are on everybody's mind. Of course, like I said, we see all these headlines about the attack on the dollar, de-dollarization, trading in yuan, all these things. But then the big hammer drop this week, which is like what's really been backing the dollar, has been this oil, this petrodollar. And then we got big announcements out of OPEC and what's happening with the petrodollar. And I want to get your take on that, as well as kind of this energy crisis and what's preventing us from transitioning back. Before we get into that, though, I want to jump into just one thing. I know you host your own show called Always Be Building, I think. That's right?
Yep, that's it.
Yeah, Always Be Building. And so let's talk about that just for a second, because, you know, for a lot of people, they're scared. And rightfully so, right? I mean, we're going through massive uncertainty right now. To me, the world has never seemed more uncertain, at least from a U.S. standpoint. I get it if you're in other countries or whatever. And so a lot of people are really paralyzed by this fear. And they get, not even this is analysis paralysis, but literally, like I said, paralyzed by fear. I don't know what to do. What's the point? I hear it all the time. These people are defeated. So anyway, let's talk about that always be building. I've believed in, because of experiences, but like bear markets are the time to be building. What's your view on that?
Absolutely. I think the best hedge you can make is a bet on yourself, right? I mean, I know a lot of people get caught up in the corporate world. I'm not saying there's anything wrong with that. I've tended to lean more in my career towards the entrepreneurship side. I've been kind of forced to do that. But what I found is that, whenever you bet on yourself, and you find out ways to create income from yourself through different businesses that you can create, it may seem more perceivably risky from the outside looking in, and there are certainly risks. I think there are different types of risks, but I think that bet on yourself and leaning into the skills that you have, really finding what you do best and doing, the most you can in life to foster that and to grow it, that's an incredible hedge, because the world is going to change, industry is going to change, the markets are going to change, but as long as you know your strengths and you like I keep saying, put the bet there on what you're good at, I think that is the best hedge to ride the ups and downs.
So you're saying, rather than having this job where most people think that job is their security, and that, as long as I have this job, I'm okay. The reality is maybe that job isn't security, because if you get fired, now you don't have any skills. And so I think what you're saying is that you're better off building your own skills, so that as the tide changes, as the world changes, you have your own skills to kind of build off of, and that's what gives you security.
Absolutely. I mean, think about it. If you're at a job, you could have a boss that you work for years. You get in really tight with that boss. You're trying to climb the ladder. Let's say that person leaves one day. Now, all of a sudden, you got a new boss, or the management changes for the company, or the company goes through a hard time. You can put in all this work. And I had this happen to me early in my career, where it was like nights and weekends, 60-hour weeks. And, things happen at the corporate level, and you look up and it's a new regime, and you feel like all that you worked for was kind of gone. Whereas with being an entrepreneur, with our client or with our companies now, we may have dozens of clients. If I get fired by a client or something doesn't work out, that's okay, because I've spread that risk across multiple things. We've created multiple income streams, whether it be through real estate, through the energy side with our businesses, through the Bitcoin mining venture that we have. So we've got these different things now that, some will argue, well, you spread yourself thin, but I think the key is having good partners, good employees, building up, specific knowledge, and then figuring out ways to leverage that knowledge and turn that into a more stable foundation. And I think, again, that's just the way I view things. I'm not saying it's the only way to do it, but I've found for me and my skills, that's what's fit me best, basically.
Yeah, I want to jump into the oil and the energy stuff and the OPEC stuff, but just one more thing that I want to kind of hit on here. Something I've been kind of thinking about, which is the new oil, and you might have heard that term before. I saw you post something on your Twitter the other day, and it said something about hey, new students or whatever. Before you move into your career, you should build your audience in that career before you jump into that. Something to that effect, and kind of made me think about how 100 years ago you needed to have capital. I wrote a book called The Uncommunist Manifesto, and one of the things Karl Marx was so mad about was that if you didn't have capital, you couldn't get ahead. And so you needed capital to get a factory and get equipment and workers and so forth. But then a guy in a dorm room could write a line of code and could become a billionaire. And so now is the leverage of being able to write code or programming. But it seems like today the new oil is this attention, is this audience. And it seems like once you've figured out how to gather attention, speak to a group, that might be one of the highest leverage skills you could have, as well as one of the highest leverage things that you could do to build that audience. You could always scale things into. And I know you also host your own show. What's your take on that for young people or anybody, I guess?
It's huge. It's probably the biggest mistake I made in my career. Sorry, Siri just kicked on there. I don't want her. They're listening to us all the time, Mark. Yeah. I think it's one of the biggest mistakes I made in my career. I basically, had become an entrepreneur. I did a lot of things right, but I was very cynical on social media. I was very cynical about, leveraging media as a technology that could be used as a tool. I, kind of viewed it as a waste of time and something that I just didn't put a lot of attention in. And I think when COVID hit, myself and a lot of people, this is a very common story that you hear, realized that a lot of my, traditional means of distribution, and by that I mean networking in some ways, which is basically getting ideas out there, meeting with people, getting in front of people, those avenues were closed off for a period of time, and just started to see the benefits of what having an audience could do. And then the other thing is, it's like that saying, if a tree falls in the woods and there's nobody there to hear it, does it really make a sound? Like, you could be the best, whatever, pick your profession. You could be the best at that profession, but the limit of that is how many people know that you're good at what you do, how many people know the value that you can create and that you can bring. And so unless you have a means of distribution for those thoughts and ideas to get that out into the world, it's very hard to maximize that value and use leverage. And so leverage could be debt, leverage could be your network, leverage could be employees, but it's also media. I think having this ability to get those ideas out there is huge. And for people that are young and looking to get into a career, there's really nothing stopping you from learning about that career, certainly, given the amount of information that's out there and the educational front, but also not just learning about it, but connecting with the people in that industry or whatever it may be. And then as you start to learn, you can create content, you can make those connections, you can start to give value to a community, and then that will grow and you can build those distribution channels. Again, I don't care how good your podcast is, how good you are at sales, or you are at whatever your profession is. If nobody's there, if your distribution channels aren't there, then it's going to be very hard to leverage that skill into creating value for yourself and others.
Yeah, a couple good things that you said there. I mean, distribution, if you think about it like that. So if you think about like a brand like Coca-Cola, like really, I mean, they have the syrup. The bottlers are the ones that make the product. But what they really have is they have the distribution. They can get any product into any store anywhere in the world. Boom, right? They can launch a new water product or whatever it is, and boom, they have that distribution. So when you think about it, it's like you have your list. I would also say, just to kind of add on to that, a couple other things is that, I think, as you've probably found, like, you think you grasp an idea, you think you grasp a concept, and you think you understand it. But once you try to actually repeat that, articulate it, write it down, whatever, you find yourself, shoot, I'm not actually that clear on this. And so, there's 3 levels of learning. 1 is to read it, learn it, 2, do it, and then 3, to teach it. And so by creating content, you're always kind of reinforcing those ideas, getting yourself to think more critically about it. Of course, then you put it out into the world, and then you get real world feedback, which then makes you really sharpen your pencil as well. If you want to take money from a philosophical level, it's really stored energy, right? I exert my energy. I get paid in money. I don't want the money, but that's where I store that energy, that labor, until I want to spend it at some point. So I think you kind of have to understand that. And so I want to jump into the oil energy markets. But before, let's just talk for a minute, because a lot of people probably have been seeing the headlines all over the news this last week. Even I saw Tucker Carlson on Fox News talking about the death of the dollar. And so For a lot of people that maybe don't know, in 1971, the dollar got off the gold standard. The gold didn't back it anymore. And then 1974 went on to an oil standard where it was really backed by oil and what Saudi Arabia was doing. Since about 2013, it seems like, is when China announced their de-dollarization efforts. And Russia followed, and that's only been accelerating. And so, Max, I know big news this week was all over the news. Everyone now, all these BRICS nations are starting to trade outside of the dollar. I mean, what's your take on that?
Well, it's a seductive idea, and it's something that people have latched on to across the media, like you've mentioned. You've seen a ton of headlines, and certainly, the dollar is the king right now across the world, and we can exert a lot of power. I mean, we hit the jackpot with Bretton Woods and being able to, control the reserve currency of the world, and then the petrodollar and the deal that we've made with the Saudis, and then the fact that 90% currently, to this day, I know people are saying it's dying, but 90% of the world's oil is still traded in dollars. And so it gives us a tremendous amount of power. And you've seen a lot of countries really, realize basically that this has put them in a situation where they're at a disadvantage. I mean, they've known this for a while, but you've got a lot of countries like China that is this kind of upstart superpower that has, ambitions. I don't think anybody would question that they have the ambition to be the world's number one superpower. And so, like you mentioned, since 2013, they've been pushing back and trying to de-dollarize. It's been more difficult, I think, than they've thought. We're very interconnected. It's not just the energy trade. It's, around the world, the amount of liquidity, the amount of interchangeability using dollars across all the different financial systems is very entrenched. But you're seeing the BRICS nations get together, and there's rumblings of, Saudi Arabia joining and them, saying, hey, can we trade in a currency other than the dollar? And you look around and it's like, well, what can you do? And China would obviously want it to be the yuan, the Russians with the ruble. And then it becomes, okay, if we're going to get off the dollar, then what are we actually going to trade in? And I made the comment in a thread I did recently on Twitter. It's kind of like the devil you know versus the devil you don't know. I tend to believe that those countries trust each other less, if you can believe it, than they trust the U.S. That might sound shocking to some, but although they don't like the U.S., they may have a common foe in the U.S. in terms of an economic foe. And even with this kind of a cold or warm war that the U.S. and NATO is in with Russia in the Ukraine situation, I still think that there's a lot of reasons why many countries probably wouldn't want to completely pull out of the dollar, at least today. Now, that doesn't mean where there's smoke, there's not fire. I think that these talks are absolutely happening. Countries are looking at different ways to either price other commodities or trade in different currencies. And I want to make a distinction between trading in a different currency, swapping, energy for that currency versus pricing it in that currency. Like, I think the dollar is still the dominant, thing that oil is being priced in, but there are now instances where, the yuan is being traded for it, or the ruble. Russia's forcing people to use the ruble. Ultimately, the yuan isn't a very liquid currency. They don't have the same, capital markets in China like we do in the U.S. Now, I'm not saying that the Fed doesn't mess with things and control things, but it is at least more, of a capitalism system, somewhat, given the central powers that control it, than China would have. And so it's something that seems to be moving in that direction. The BRICS countries are about 40% of the world's population, so it's a huge block of people. And they're about, roughly 15, 20% of the world's GDP or economies. And so it's something that the U.S. is paying attention to. I think in the near term, it's not likely to happen, barring some just massive, geopolitical shift, like some kind of crazy war, or hyperinflation or something along those lines. So it's a really fun topic to talk about. In summary, I think where there's smoke, there's fire. These trends are going on. It may be premature to say that this is happening today, but certainly there's many countries that wish that it would.
Yeah, I think the nuance is that it's not that it's happening and it's not imminent, but it's the direction that we're going. And I think that's the distinction. And so, I think to the point that you made, I mean, the dollar is still probably the cleanest shirt in the dirty laundry, or whatever, as people like to say. It's still probably the most trusted. As much as they don't trust the dollar, they don't trust China even more, or each other more. So there's a lot of that. And so this is certainly not imminent. Now, I'm certainly one that loves to stoke the fire of the death of the dollar. I've made plenty of videos and tweets about it and so forth. But to your point, it's not imminent. It's not like it's happening tomorrow, but it's the direction. I put something on Twitter this week, and I said, the dollar's dead. Everyone's trading in yuan. And I said, but only 1.3% of global payments were in yuan in January. compared to 40% in dollars, 38% in euros, 7% in pounds, 3% yen, and then we have 1.3% in yuan. So while it's certainly happening, while it's certainly a trend, it's not imminent. It's not like it's happening right away. And I think this trend will continue, and maybe you start to see that diversification happen. But at the same time, to your point, do they trust the U.S. more than they trust other nations? And the fact is they probably do. There's, the Lindy effect. The longer something's been around, the more likely it is to be around. The problem is, what I see is that, it seems like the U.S. really crossed the Rubicon, so to speak, when they seized Russia's bank accounts.
Yeah.
And I think now it's like, well, we don't trust China. We don't trust any of these other countries, but I guess we trust the U.S. But now if it's like a point where we don't trust the U.S. either. And so we have seen central banks have added more gold than any time in history. So there's certainly, I put a chart up last week. I got it from Luke Grauman, where we see central bank holdings of U.S. Treasuries trending down and U.S. central bank holdings of gold trending up. So there is a trend like that.
Absolutely. Well, and I think that people are trying to diversify away somewhat, especially countries like Russia. I mean, it's a no-brainer for them. They've been planning this for a while, and you can look at their reserves and see them kind of prepping for this. There's a lot of warning signs for this Ukraine thing, and it was surprising it just caught as many people off guard. One thing that the U.S. does have going for it that will be hard to break when it comes to reserve currency status is that we still have the largest military. I think we spend as much as the rest of the world combined on our military. China's catching up, but we still have the largest. We are the largest energy producer for oil and gas in the world, and we are one of the largest agriculture producers. I think we're third. We are also probably number one in the world with technology. Again, China wants to take Taiwan, and they want to, strangle that industry as well. We're doing some things to onshore some of that, but we're still, you got to say California and Silicon Valley still, the number one in tech. So we've got the number one or the top across a bunch of categories. And so, and it's just I don't know if you've ever read any of Zehan's work about the accidental superpower. The U.S. is just set up in a great position geographically. Our population demographics are a lot better. They're not great, but they're better than a lot of these other countries. We've got a ton of stuff going for us, and so it's
it's certainly ours to lose.
It's ours to lose. We're like you said, it's we're the cleanest of the dirtiest, or however you put it.
It's certainly ours to lose. Unfortunately, I see the leaders doing everything they can to lose it. I want to talk for a minute just about energy and really how this kind of relates into this energy transition. And so, the United States and Europe, basically, and Davos, it's Obama, Biden, Euro, Davos are completely bent on transitioning to this, green, renewable, sustainable, whatever they call it, energy economy. And, to the point that you were making before the break and talking about the U.S., it's ours to lose, so to speak, and that, we're God blessed where we have the best arable land and we have the best defenses, but we also have energy. Now, China doesn't have any energy. They have to import 85% of their energy, but the U.S. has energy. Europe also has energy. There's a lot of natural gas over there as well. But the U.S. and Europe don't want to get it out of the ground. And it's sort of interesting if you look at so we've depended on Saudi Arabia protecting the dollar with oil. We could the U.S. could just get the oil. We were the largest producing nation at one point. But now in this green transition, it's almost let's just give all the energy production to China, which doesn't have any energy, but they produce the solar panels, they produce the windmills and things like that. So I'm curious about that. That seems kind of interesting. And then the other thing is, so now we're kind of under attack from OPEC, meaning the Fed is trying to fight inflation. They're trying to crush demand. But then OPEC, the oil-producing nation, said, well, we'll just lower our production of oil. And we can probably lower our production of oil faster than you can crush demand. And let's see how that works out. And what can the U.S. do to protect against that if we won't pump our own oil out of the ground?
Yeah. Well, the ESG stuff's been fascinating, something I've tracked a lot with a lot of the podcast guests that I've had. And I think the U.S. is the number one energy producer in the world in a lot of ways, despite of ourselves. And I think the key there is personal property rights and some of the freedoms that we are guaranteed via our Constitution and the way this nation was set up. In the U.S., which is different from almost all the rest of the world, individual, people have the rights to own the minerals in the ground. So it can be owned by, landowners, farmers, people that have had it in their family for generations. Investors can own the minerals, companies, things like that. And so we have the ability to extract the resources, and then the royalty owner, mineral owner, whichever you want to call them, they can then get the proceeds for that. Now, we also have federal lands, and we develop oil and gas on that as well. But the rest of the countries in the world, it's pretty much nationalized and owned by the government. And so in the U.S., we were able to foster an incredible amount of innovation with the shale revolution. For those of you that don't know, the last 15 years, we've unlocked just this tsunami of new natural gas and oil, and we've really become the dominant player in the world. And I think I would attribute that mostly to these personal liberties and freedoms that we have to own those minerals, which has then allowed a lot of small entrepreneurial companies to create innovation and to basically take the world by storm. OPEC, sure. And that's despite our government not wanting it, or at least half the government, in terms of when the Democrats are in power. And then you've got now this ESG movement, which in a lot of ways has a lot of collectivist undertones around, hey, the world is ending. I'm not going to sit here and debate climate, but I will say that the undertones are there's this, catastrophic emergency coming, and that, only the government and these other technologies that wouldn't make sense economically on their own, and I'm talking about renewables, they would not make economic sense on their own, so now they have to be subsidized, and we have to regulate away oil and gas. And so back to what we were talking about earlier with the BRICS countries, these countries like OPEC or Russia, they're looking at this and they love it. It's like, hey, stop the U.S. from being the number one superpower. Well, a good way to do that would be to stifle our energy production, our energy innovation. And so Europe has done a great job of killing that industry for them. They do have oil and gas, and outside of a few areas, they're really not producing what they have. They've banned fracking. They've banned a lot of the innovation that we've done, and they've tried to lean in to these renewables, and it's made them less energy secure, which has made them depend on countries like Russia, which has given Russia a ton of power. And it really, one of the main reasons why I feel like Russia felt like they could launch into the war in Ukraine was because they had that power over Europe, given that they were supplying them with a lot of their energy. And so OPEC now sees that this ESG movement is taking hold. And it's not just ESG. I will put a little blame on the oil and gas companies too. In the U.S., we got so good at producing it, we crashed the prices the last 10 years because we produced too much. So the returns weren't stellar also, but that was another convenient reason for investors to leave. And so OPEC sees us now as less of a threat in terms of market share, because we're not growing production like we once were, because of these capital constraints that are being put on by the BlackRocks of the world, trying to stop us from getting funding, suppressing the stock prices of these companies. And therefore now OPEC says, you know what, we can cut back production and we can raise the price of it because we're not scared of the U.S. Continuing to grow at the pace that we've gone on. So there's a lot of nuance in all these topics, but ESG and OPEC and power and geopolitics, it all plays in, and it's just a really fascinating space that we could talk about for a long time.
Do you think, in addition to our own attack, like the ESG and policies, things like that, Biden administration shutting down oil and gas leases, et cetera, but on top of that, as the Fed continues to raise rates at this breakneck speed, they're also putting capital constraints on the oil and gas industry, which is very capital intensive. So even if the Biden administration said, okay, let's turn the spigots back on, let's get the oil and gas out of the ground, there's still capital constraints because of interest rates being so high.
This is like the paradox of rising interest rates. Like, they rise interest rates because if you're a hammer, everything looks like a nail. They're trying to kill demand. But the key when it comes to a lot of the things that we need, right? Like you mentioned Luke Gromen earlier. He said before, you can print dollars, but you can't print oil. Well, the problem is we also need supply. So it's not just a demand problem with inflation. It's a supply problem. And whenever you raise rates and it makes capital, the credit, contracts, credit cycle contracts, it makes it harder for people to get access to capital. Borrowing costs are higher. Service costs are higher. A lot of these service companies that, for example, provide drilling rigs or provide crews that go out there and, pump these wells and get them online. These guys are very tight cash cycle businesses where they need lines of credit. They need to hire people. They need to advance money. They have to buy equipment. They have to buy things that require them to have credit. And as rates go up, it makes it harder for companies in these capital-intensive businesses to grow supply. And so in some ways, even though they're trying to stifle demand, it will have a ripple effect on the supply side as well.
Yeah, for sure. Yeah, it certainly makes them harder. And then you have the changing supply or price of the money. So then it's like, one, it obviously going up makes it harder, but two, not knowing where it's going to go creates a big problem as well. And it really limits our ability to change that. Another thing that I'm seeing happening is kind of off of Zoltan Pozar's thesis about this kind of Bretton Woods 3 type of a situation, where we kind of basically had commodity money, which was gold, and then a gold-backed currency. He argues in 1971 we got off gold standard, went to this kind of free-floating fiat currency he calls inside money, and now we're going back into this commodity money type of world. And so we kind of see that central banks are buying more gold and trending gold buying up and trending U.S. Treasuries down. But also he argues that nations would want to hold their commodities in the ground. And so some of this might be like sort of that, right? Which is like, well, why would we continue to pump all this oil out of the ground and put it into whatever fiat that's all basically at the same risk versus why don't we just hold the commodity in the ground?
Yeah, I mean, there's an argument I've seen, not that I love all of his takes, but I think I saw Charlie Munger speech that he gave where he was saying he didn't want us to produce our oil because he knows that he has the reality to know that we're going to need it for a lot longer than people think that we're going to need it. And he's like, to the extent that we don't need it today, he's like, this is a power base for the U.S. So the more that we produce, the more that we drill our best inventory and the best rock that we have, that's less resource we have to produce into the future. And you mentioned maybe the death of the dollar might be exaggerated. Well, the death of oil and gas is certainly exaggerated. I think peak oil demand is way off into the future. There are billions of people that wish that they had the lifestyles that we have, and they're not there yet in terms of these other third world countries, and they want to be there. And there is no silver bullet to power all their stuff on solar panels. It's just not going to happen in the near future. Nuclear power does provide some hope for a future where we could have a lower carbon, more abundant energy, but that's not taking off either. In fact, that industry is shrinking in a lot of ways. So we're going to need these products. And if you're OPEC, it's the same dynamic. You've got a lot of power. Saudi Arabia knows that their reserves aren't unlimited. OPEC's had issues raising their production to meet the quotas.
Boy, what a conversation we just had. If you're just tuning in, we were just talking with Max Gagliardi, kind of framing up the way that the world is changing, the death of the dollar, what's happening with OPEC and so many other things, But I want to just kind of bring it back and kind of think about it like, what does it mean? Like, you see this all over the news. Like I said, it got CNN's talking about it. Tucker Carlson's talking about it. The death of the dollar, is it happening? Is it exaggerated? OPEC now, Saudi Arabia doesn't want to work with the United States anymore. What does all of this mean? Why do you care? What's going to happen? Well, let's talk about that. So ultimately, as I kind of was alluding to, if you were in the beginning of the conversation I had with Max, if you kind of understand the way that history works, is that money is just a medium of exchange. It doesn't really mean anything. And I know this might sound shocking to you, but none of us actually want money. And you might go, what are you talking about, Mark? I want as much money as I can get. You don't actually want money. What you want is the things that money will buy you. So you want the bigger house, you want the new car, you want to take your family on a vacation, you want to retire one day. Well, those are the things that money will buy you, right? And the reason why it's important to understand that distinction is because money is a medium of exchange. It just allows us to get those things, the house, the car, etc. And it's important to understand the distinction because since we don't want money, we don't care what we use as money. Well, the only reason we care about what we use as money is because we wanted to reliably store that value. We want to be able to take my labor from today and park it in money and then go buy the things I want later. And so I wouldn't want to put it in whatever form of money and then it wouldn't hold its value, wouldn't buy me stuff later. So like famous examples of Weimar Republic Germany, they were going through hyperinflation and employees were literally getting paid multiple times per day because their money, which was the German mark at the time, their money, the German mark, was losing value so fast that if they didn't go buy the supplies they needed at that time, then they would not get as many supplies. And so eventually they got off of that. People would move to gold, etc. And so you don't really care if you're using a German mark. You don't care if you're using gold. You don't care if you're using a euro, yen, a dollar. What you do care about is, will it reliably hold my money? Now, what's made the dollar to be such a strong currency, as Max was alluding to, is that it was backed by gold. And so we knew that any given time, you could always go redeem $35 for 1 ounce of gold. So it was always redeemable, 35 ounces of gold. The problem is when we got off the gold standard in 1971, there was nothing backing it, and so we went into the petrodollar. And then all the dollars demand were around the fact that all oil was priced in dollars. And so if you wanted energy, which without energy you die, so of course you want energy, you had to pay with dollars. So there was this demand. The problem is now is if that demand goes away, which Saudi Arabia says it's going to sell oil outside of the US dollar. Saudi Arabia doesn't care what the United States thinks anymore, which is a big shift. So then what happens? Why do you care about this? Well, ultimately you care because if you live in the United States, if you're listening to this on radio right now and you live in the United States, or if you use the dollar has managed to maintain its place in the world, which gives the dollar holders or the dollar users massive advantages. It's why the United States has grown so prosperous. It's why life in the United States is so good compared to most third world countries. It's because we can produce the dollar very cheap. It's something known as the Cantillon Effect. Basically, the Cantillon Effect says whoever is closest to the money supply gets the biggest benefit. And so it costs the United States government about 17 cents to produce a dollar. But another nation has to produce $100 worth of goods in order to get the $100 bill. And so it has a massive, enormous benefits to people in the United States. We're closest to the money spigot, closest to the money supply. And then those higher prices that get created by creating so many extra dollars get pushed down to these third world countries, which is why you see Turkey and Lebanon and Argentina and Venezuela all seeing record amounts of inflation. We push that inflation down. So if the United States were to lose that position of power over creating money, over the Cantillon Effect, then the United States and all of us, including myself who live on that US dollar, would lose those benefits, and we'd be back to maybe something like living in a third world country. The dollar would see massive inflation, meaning prices would spiral out of control. Now, I had a friend reach out to me this last week and said, "Mark, I'm seeing these headlines all over the news saying that the dollar is, the dollar's losing its status. Nations are starting to trade outside of the dollar, all these things." And I said, okay. He's like, "But I'm worried. What am I going to do?" I said, "What are you worried about?" He said, "Well, I'm worried that I'm going to wake up one day and all the money in my bank account is going to buy me half as many goods and services as it does right now." And I said, "Well, that's a valid concern," but I said, "That's already happened." He's like, "What do you mean that's already happened?" I said, "Well, how much is your house worth right now?" He said, "About $4 million. I said, "How much was it worth 5 years ago?" He said, 1.7. I said, "So your dollar buys you less than half as many houses as it would have 5 years ago." As a matter of fact, since January of 2019, so 4 years ago, basically, a little over 4 years ago, January of 2019, the dollar has lost 60% of its value, purchasing power, to the S&P 500. It's lost 77% of its purchasing power to Bitcoin. It's lost 51% of its purchasing power to the median U.S. real estate. It's lost about 60% of its purchasing power to gasoline. So his greatest fear is that he'd wake up one day and his dollars would buy him half as many goods as they do today. I said, it's already realized. The dollar already buys you half as many goods today as it did just 4 years ago. And so this will only continue. But the problem is if we continue to see the dollar lose its grip on the reserve currency status, meaning Saudi Arabia continues to sell oil outside the dollar, nations start de-dollarizing as they've already been doing, then that inflation will only get worse, and it will get worse at a faster rate. Now, like I said, he didn't understand, and most people listening maybe don't understand this, that the dollar's already lost 50% of its purchasing power just in the last 4 years or more, depending on what asset you're comparing it to. Now, not all assets are evenly distributed. The more scarce the asset, the more in demand the asset, the more it goes up. So, for example, his house went from $1.7 million to $4 million in a couple years because he lives by the beach. So beach, waterfront property are very scarce. Those are what we'd call trophy assets. They go up more than a house in the Midwest, like in Kansas or Missouri, would go up. Homes across the lakefront are going to go up faster than homes an hour from the lake because there's only so many homes in the lake. It's also why we see a scarce asset like Bitcoin going up faster. Bitcoin's up 77% in the last 4 years, while real estate's only up 50%, for example. But anyway, if we continue to see this trend, which I believe we will, we're going to continue to see inflation raging on. It's one of the reasons why, as I said, Bitcoin's up 77%, and gold has also broken out to almost a new all-time high. It broke that $2,000 level. It's pretty much there. A couple more dollars, and we're going to be off to the races with gold. And the reason why is because it sees all of this happening. And as I said before, I believe success leaves clues. You find the most successful people, you do about the same things that they're doing, and you should have about the same results. So who are the most successful people? Well, the central bankers certainly know what's going on. They're the ones that set the policy. So I look to them. If they're starting to hold less dollars and hold more hard assets, then I want to hold less dollars and I want to hold more hard assets. Particularly, I want to hold hard assets that are outside the control of the government and the central banks. That would be Bitcoin. That would be gold. It would be those types of assets. Hopefully that makes sense. Hopefully this brings some perspective as to what's going on. Like I said, it's one thing to be scared and concerned, which you should be. You should be paying attention. But more importantly, what does it mean to you? And that's what it means. If you're just tuning in, you're listening to the Mark Moss Show. Of course, we talk about the decentralized revolution. We talk about the way the world is breaking up from a centrally planned, a globally coordinated economy to a decentralized world, which is exactly what's happening, and going from a centralized money where the dollar is the reserve currency status of the world to a decentralized money standard where everybody kind of uses different things. Anyway, that's what we got for today. Hopefully you enjoyed it. Thanks for listening.